Okay, guys, so I want to make another quick video for you using this impulse scanner. This impulse scanner is just really incredible. And this is probably about the fourth or fifth video, maybe the sixth video that I made today, because I've got to get this information out to you guys. So I did a video earlier today showing you one way to take a trade using this impulse scanner, and that's using this macro trend indicator down here. So I already did a video showing you examples of that. Actually showed you 8 winning trades and 0 losing trades from Thursday night this week into Friday morning, right? And so this little macro tool is right here, and that turns it on and off if you want to use that. That's one way to take trades. Now, another way to take trades is by using this the color-coded indicators, okay? Now, when you use the macro, you don't need to necessarily leave the indicators on. You can turn them off if you're using just the macro to trade. I like to leave them on. But when you're using these 4 indicators here, which are this line here is your primary trend line or your long-term trend. These 2 lines here are your secondary trend line. So they're like your short-term trend or your short-term moving averages. And the primary trend line is your long-term moving average. Similar to the 200, and this could be similar to maybe using a 13 and a 25 moving average for short-term. Then down here we have our oversold indicator, which is the stochastic. And then down here is our momentum indicator, which is the RSI. So when we're using the color-coded system here to take our trades, we can leave this macro indicator on or we can turn it off. We don't really need it. Now, with these color-coded system here, red simply means that it's bearish and blue means it's bullish, right? So in this case here, when this primary trend line is red like it is now, that means the overall trend is bearish, right? Or down. Now here, where on the short-term trend here, on the secondary trend, when the red is above the blue, that means that that's bearish as well. So we want all the reds to line up or all the blues to line up to take a buy, right? If we want to take a buy, all the blues. If we want to take a sell, all the reds. Okay, then in this stochastic here, whenever price is at or above the red line, that is a bearish indication because that's telling us that the currency is currently overbought, so it's probably going to go down. Now, again, you can't use these by themselves. You have to use them in combination. And then down here, when the RSI or the momentum indicator is in the red zone or below it, that is a bearish indication telling us we have bearish momentum to the downside. So we want all 4 of these indicators to line up. And over here in our alert panel, we can also have another way to see whether or not the primary trend and the secondary trend are lining up. Okay, so we're in AUD NZD right now, and you can see that both these little red arrows are down, meaning that both the primary and the secondary trend are bearish, right? And you can see that as well when you look at the lines, okay? When the red line is above the blue line here, and you can see here on the primary trend back here, it was blue, meaning it was bullish, and then it turns red. Now, your best trades are going to happen, guys, whenever these cross over. Whenever you get a crossover of this primary trend, and then you get a crossover of the secondary trend, and then you look for your 2 indicators to line up, right? So that's basically how we will use this strategy. So right here, I have a few pairs that I went through, and I kind of marked them up a little bit here so I wouldn't lose my place in them. And sometimes it takes me a while to analyze these pairs and find these areas. But basically, when you're using this this system to take trades with the impulse scanner, the color-coded indicator system, you know, you want to make sure that the strength, well, you always want to make sure that the strength of the pair here, the trend strength is 20 or above, okay? Because what happens is if the trend strength is 20 or below, then that means it's not heavily trending, it's more or less consolidating. And one of the things that we learn is when we use indicators, different indicators to take trades, is that when price is consolidating, what's the problem? The problem is the indicators don't work. And that's where you get knocked in and out of trades and you lose most of your money. So what's important about this scanner is in the alert panel here, it's not only telling you which way the primary trend and the secondary trend are going, but it's also telling you the strength of the current trend. So you want pairs where the strength of the trend is 20 or above, okay? So right now we can see the market's closed right now. It's Saturday afternoon. So we could see AUD NZD is rated as a 27 and both arrows are down, meaning it is bearish. So what that tells us is that we need to look for a situation. Okay, so right here, you could see the primary trend blue and then it changes to red. So that's a change in the primary trend. Okay, and then right here, we can see that the red line drops below the blue line. Okay, so now what we need is we need a situation where, I'm sorry, right here that we want the red line to be above the blue line, not below it. Okay, so when you're looking at the secondary trend, right, if the red is above the blue, that means it's bearish. If the blue is above the red, then it's bullish. So in this case, we want the red above the blue. So right here, we get a situation where the red comes back above the blue, and now we're looking for price. Let's see here. So this pair here, I've kind of marked up wrong here. Let me get to my next pair here, AUD USD. Okay, so that really wasn't what I was looking at. Okay, so in AUD USD, we're looking at it here. We see that what we're doing is we're going back here to Thursday morning to find this trade. And again, we don't need to have the macro indicator on if we don't want to. But right here, we see that the primary trend turns blue, right? The blue is above the red. And now we're looking for the stochastic to move to the blue line or below, telling us that the price is currently oversold, so it should go up. We should look to buy it. And then right here, we want the momentum indicator to be in the blue zone. This is our RSI indicator. So at this point right here, we have all four indicators lining up as blue, okay? And when that happens, okay, let's just show you, let's just take this off here for a second. You're going to enter that trade either at the close of that candle or at the open of the next candle. So in this case, I'm going to use the open of the next candle, right? So that's right here. Now, the way that you calculate your stop is we use a volatility stop with this strategy. It's one way to use it to calculate a stop loss. So what we're looking at is on this candle right here, the candle that caused the stochastic to drop down below the blue line here. We want to measure the volatility, and the volatility we can find here in the Bollinger Band type indicator on the chart here. And the volatility is the white area. So let me just show you this real fast here. If we were to measure this white area here, which is basically from there to there, okay, so that's the size of that volatility area. Okay, and then if we were to use the body of this candle right here, okay, to calculate our stop loss, right? So this is the candle. We take it from the body, then our stop loss would be right there at about 18 pips. And then, of course, in order to get our 1-to-2 risk to reward ratio trade to the upside, price would only have to move about to there, which it easily did, right? So again, we always go for that 1-to-2 risk to reward ratio trade, especially if you're a beginner or intermediate trader. Once you're an advanced trader, you can change that because you can see that a lot of these pairs on this scanner will go to 1 to 3s, 1 to 4s, even 1 to 5s or more. Okay, now in the training for this scanner, and again, the two educators do the live training 5 days a week, 3 sessions each day. They actually show you different ways to trail your stop loss so that you can keep more of the money. And also, you know, they show you a way to maybe set your take profit at a 1 to 5 and then trail your stop loss up so that you can keep the profits if it decides to turn against you. Okay, so this was AUD USD. So again, we went back to here. Okay, so at this point right here, we seen that, you know, the primary trend was bullish, the secondary trend was bullish, the oscillator was bullish, and momentum was bullish, right? And so at that point there, we used that candle to calculate our stop loss. Okay, and we measured the volatility area, which is the white area inside of these two Bollinger Bands here that are gray. And then we added that to the bottom of this candle here, and that gave us our stop loss down in this area right here. Okay, so that was an easy 2% gain right there. Now let's look at another pair. Let's look at GBP USD. Okay, now of course right now the strength is a 23. The primary trend is up, the secondary trend is down, right? But we're going to go back to right here. We're going to go back a little bit here, and again, we're going back to Thursday morning, right? And we're going to turn that macro indicator off. And what we see here, right here, we see the primary trend line is bearish here as price is below that line. And then right here, price comes up above the line, and that line turns bullish, turns blue. Okay. And then right here, what happens is the blue line, right, is now above the red line. That's your secondary trend, right? And so when that blue line is above the red line, that's a bullish indication. So now we have two blues, right? And now what we need to look for is we need to look for price to come down to the blue line here, right? Okay, so right now it's up in the red line saying it's overbought. So we obviously don't want to buy it there. So we have the primary trend is blue, is bullish. The secondary trend is bullish. And now we want to wait for our stochastic. We want to find a time where it drops down to the blue line. And that's right here. So that's basically on this candle right here. Okay. So on that candle right there, price drops below, the indicator drops down below the blue line, turning it bullish. And right here, our momentum indicator, our RSI is in the blue as well. So that's bullish as well. So everything is now blue. So this is an indication to take a position long. Okay, right here. So again, this is the candle that we're using to take the trade. And we're going to enter at the close of that candle or at the open of the next candle. Let's say we get in at the open of the next candle. We're going to take our long position right there. And now we're going to have to use this blue area, this white area here to calculate our volatility, right? So if we just quickly measure the distance between the bottom of this gray zone to the top of this gray zone, right? Okay. And then we're going to take that and we're going to add that now to the bottom of this candle. And so our stop loss has to go right down around here at about 30 pips. Okay, so that's how you calculate the stop loss using this impulse scanner. If you're using a volatility-based stop loss, right? The volatility is built into the scanner because of these Bollinger Bands here. So the volatility area is the white area. Notice how price moves very rapidly up. This volatility area increases. Okay, so you want to make sure that your stop loss is volatility based using this scanner. You can't just use a support or resistance or the bottom of the candle or the bottom of the wick, you have to use a volatility based stop loss with this scanner, or you'll get stopped out of your trades prematurely. Okay, so our risk here is about, like we said, what is that about? Our risk is about 30 pips. So in order to get our 1 to 2 risk to reward ratio trade, so we risk 1% to get 2%, we have to get about 60 pips to the upside here. And we can see that if we get in this trade, right, at the open of this candle at 8:45 a.m. on Thursday morning, we will get out of this trade, right, at about 3:15 a.m. the next day with our 2% profit. Okay, so this is how you use the impulse scanner to take trades using the 4 built-in indicators and the color-coded system, right? So that's another one. Let's see if we can find, I think we have one more pair, NZD CAD. Okay, so currently, as you can see here, like I said, it's Saturday afternoon, market's closed. It's telling us over here in the alert panel that NZD CAD, the primary trend is bullish and the secondary trend is bullish as well. And the strength is 46, very high strength. And of course, that's when it closed right here. So we can go back a little bit here. And we could see we have a macro trend indication right here, right, as well. That's a good sign, but you don't really need that on if you're using the indicators to take the trade. Okay, so right here, what we see is the primary trend line is bullish, right? It's been bullish for a while here, back to here. And so right here, we have a situation where the blue line on the secondary trend goes above the red line, making that bullish as well. So now what we need is, we need the stochastic to drop down to the blue line or below, and it does that right here on this red candle. And then we need to make sure that our momentum indicator, the RSI, is bullish as well. And of course, it's way up here above the blue. So anything in the blue or above is bullish, right? And anything in the red or below is bearish, okay? So our primary trend is bullish, our secondary trend is bullish, our stochastic indicator is bullish because it's now overbought. I'm sorry, it's oversold, telling us it's time to buy. And our momentum indicator is bullish as well. So all 4 of our indicators are lining up as blue. That's what we need. And we need that candle where the stochastic, so normally it's going to be the stochastic indicator here that gives you the actual last reason to take the trade, right? And then you just have to make sure the RSI lines up. Okay, so because you see all the way across here, you wouldn't want to take a trade because the stochastic here is up at the red line or above. So that's a bearish indication because it's overbought, right? So when it's overbought, chances are it's going to drop. When it's oversold down here at the blue or below, then chances are it's going to go up again. You can't use this indicator by itself. You'll lose just about every trade. But when you combine it with the primary trend, the secondary trend, and the momentum indicator, the RSI, then it's a different story. Okay, so right here is our indication to take this trade long. Okay, so again, we want to get into this trade at the close of this candle, the one that goes below the blue line on the stochastic, or at the open of the next candle. So let's say we just use the open of the next candle here. Okay, now we have to calculate our stop loss. In order to do that, we have to use the volatility at the time of that candle, that entry candle, right? So we want to measure the white area here. Okay, so if we go from the white area to the white area, that's about the length of it. And then what we have to do is now we have to move this up to the bottom of that candle. And that's going to give us that's going to tell us where to put our stop loss. Okay, so a little bit further down, right about there. So we're going to move our stop loss down. So we're basically risking about 35 pips to get 70 pips on this pair. So as you can see here, let's move this up here. In order to get our 1 to 2, price has to move up to this area right here. And as you can see, on Friday, price closed just a little bit below that area. Okay, so this trade hasn't completed yet. The last 2 trades I showed you completed in profit. This trade here, you would have taken the trade essentially at 11:15 p.m. on Thursday evening. That's Eastern time, right? And you would still be in the trade. Now, if you're like me, you're not going to hold your trades over the weekend. Okay, so you're more than likely going to exit all trades, about 1 hour before the market closes on Friday. So you would have exited this trade in profit. But for the purposes of this strategy, we'll leave this marked up here and we'll look and see how this trade finishes. Okay, but right now you can see it's very strong in profit. And I showed you 2 other trades that were in profit as well. Now let's go back to that first one I pulled up here because I had it marked up the wrong way here. Let me just see what it looks like again. Okay, so this is AUD NZD. Of course, right now, both of the arrows are down, saying it's bearish, and the trend strength is about a 27. Okay, so we don't need this macro indicator for this strategy here. And what we want to do is we want to see where do we have an opportunity to take this trade. Okay, so right here, price is, our primary trend line is red, meaning it's bearish. And so now right here, we're looking and we see that the red line is now above the blue line. So that's a bearish indication on our secondary trend, right? So now what we need is we need price to move up. Let's see if we can find another area here. So right here, let's go back to here because this is a better area. See how right here, the primary trend line is bullish and then it changes to bearish right here. This is where you're going to find your best trades. Okay. Now, when it changes to bearish, we also see, right, that the red line is above the blue line. So that's a bearish indication as well, right? So right here, okay, we can see that. Now on this candle right here, we can't really tell if it still looks like the primary trend is bullish. So we won't want to use that candle. So now price comes down here, right? And so right here, now we're looking for price to move up to the red line or below, above, which it does right here. Okay, so this candle right here actually does, right, move up into the red, and look down here and the momentum indicator is bearish as well. Okay, so right here, just show you this real fast here. Basically right here, as early as right here, we have the long-term, we have the primary trend bearish, right? We have the secondary trend bearish because the red line is above the blue line on the secondary trend. We now have the stochastic bearish because price is above the red line. And down here, our momentum indicator is in the red as well. So that's bearish as well. So if we're going to use that candle to take a short position right now, okay? And so again, we would want to enter at the close of that candle or at the open of the next candle. So let's just use the open of the next candle here. So let's say right there. And then, of course, we have to use the volatility-based stop loss. So we're going to measure the white area at the time that this candle closed. Okay, so let me just show you that real fast. I'm just going to grab this arrow here to try kind of quickly measure that area. It's about like that, right? And so now what we have to do is we have to add that distance to the top of that wick there, okay? So our stop loss for this is essentially going to go about right there at about 18 pips. Okay. And you can see here, this is why it's so important to use a volatility-based stop loss. Because right here, as soon as you get in this trade, it goes in the drawdown, right? It goes against you. And then it goes against you even more. Okay. So if you don't use a volatility-based stop loss with this strategy, you're going to get stopped out at a loss here. Okay. If you try to just use the wick on that candle, right, you're going to get stopped out at a loss, right? Okay. Or even if you try to use this short-term high wick right here, you probably get stopped out as well. So you have to use that volatility. You have to take into account the volatility, and that's built into the scanner here for you. So we have our stop loss at about 18 pips. And so in order to get our 1 to 2 risk to reward ratio on this trade, we have to get about 36 pips to the downside. And you can see that we just missed that here on the last candle of the day, Friday. Okay. And like I said, if you're like me, you're going to exit all of your trades on Friday. You don't want to hold trades over the weekend, because what will happen is price can gap up or down on you when the market opens, right? On Sunday at 5 p.m. Eastern time, right? That's the New Zealand market that opens. And when that happens, price can gap up or down, and it can go right through your stop loss. Now it can go in your favor as well, but it can also go against your favor, and you can lose more than 1% or 2% on your account, depending on what you're risking. Okay, so this is how you use the impulse scanner to take trades using the 4 color-coded indicators. Okay, so if you're ready to get this scanner, guys, let me know. There'll be a link down below this video if you want to sign up, or you can contact me, get the link from me. And again, the company has a 7-day money-back guarantee. So you can kick the tires for 7 days, right? And if you don't think that you'll make money with this scanner, and with all the live training you're going to get on how to actually use this scanner, right, then you can ask the company for your money back as long as you're within that 7 day window. Okay. But with this scanner, guys, it works. It's just awesome. And you're going to get access to the live training 5 days a week, 3 training sessions a day, right? Where, you know, these guys come on, they do a live session. They go through the indices using the scanner, right? Then they come back on, they go through forex pairs, and then they come back on, they do a final training for the day, which is a training on how to use the scanner in various situations. And there's tons of recorded videos already in the back office there for you to look at. So this is our impulse scanner, guys, and you're going to want to get started with this because we're already in the 3rd quarter of 2023. And if you haven't got to your income goals yet, or if you want to learn how to trade forex, but you just didn't have the time to watch 100 different videos, right? This is for you guys, because with this scanner, you can literally watch less than an hour's worth of videos and you'll know how to use it. Actually, if you just watch my videos, this video and the video I did earlier today, you'll be able to use it as well just from that. So this is what you're going to want to use here. And this is primarily what I'm going to use in 2024. Now, I'm still going to do my smart money trades as well. Still going to do my smart money analysis in my group every week and during the week. But I'm also going to post these trades as well from the impulse scanner. So Bill Soriano from Pittsburgh, guys, have a great night.